Hey traders, this is Ron Hayden at Market Tamer. Happy Sunday. I hope you're having a fantastic holiday weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the diamonds, which is the Dow ETF, on a daily chart using thinkorswim profit charts. And if you go back to January of this year through now, it's pretty much gigantic trading range. 265-ish down into the low to mid 230s. But if I zoom in here closer, you can see once the sell-off began here, sort of right after Labor Day, which is typically when the market marks a high for the short term, the volumes picked up. The red volume is beating the black volume. Red are down days, black are up days. We came down, we then started to move up, started to set a higher high, an inner higher high. Here's a low. So far, up until the earlier part of last week, at the end of the week before, we had higher lows. Well, that all fell apart this past holiday week. And holiday weeks usually side with bulls. This was even further on the unusual side. But you know what happened Friday? Yeah, it was light volume, but we just closed to new near-term lows. This completely gives the bears the edge technically going into this week on the daily charts. If we take a look at the SPY, something I have a bullish position in, if we zoom in here, what do we see? New near-term closing lows as well. Again, volume was light, but right now, what's happening? I could still extend this range. I know, I do understand that we just got below. Let's try that again. We just closed the bottom side of that box there, but I could still say trading range, barely. Now, if I zoom out here, there are the lows from 255, 260. Right now, that is the target on the SPY. We take a look at the IWM, which is the Russell 2000. A little bit of outperformance here, only going by the days, not certainly by the months, but we are not at new near-term closing lows yet. And if we go to MDY, which are your S&P mid-caps, also not at new near-term closing lows. So the diamond SPY not looking good, the Q's looking a little, I'm sorry, the IWM MDY looking a little better. And if we go to the Q's, they already blew through those lows. We hit new near-term closing lows already back on 11/19. Their target is right around that 154, 156 area. If we take a look at VIX, still sitting in a bullish posture. The spike up, go back up again, come down, we're bouncing. This could still be construed as a bit of a bull flag. Bullish VIX is still bearish for equities. And the VIX is only in the 20s. You'd think it might be higher with some of these bigger down days we've seen, and it just isn't translating into a spiking VIX. So if money seems to be definitely coming out of the Qs, they're performing the worst, and the overall broad market, are they running into bonds? I would say no. The bonds finished essentially unchanged on Friday. There's a slight move up, but they're barely rallying at all, and there's no spike in volume. So if they're not running into bonds, have they started to run into gold? Via GLD? No, they're going nowhere fast. Well, how about maybe emerging markets? EEM? Nope, still in a long-term downtrend. Well, how about China, right? Maybe they're going to China, and the answer is nope again. So it's just money coming out of the stock market, but it's certainly not running into other places yet. Still bullish longer term on the US stock market. Here is Apple. Down again on Friday. This thing, it's had a gap here. It's had another big gap here. The next support level, I talked to you guys, might be these lows here. We're sort of testing it. That was the gap up in May earnings. But then the gap fill, which was the day before earnings, is down around 167, 166, another $6-7 lower. And then you go to 160 and then down here. So Apple's falling off a cliff right now. How about NVDA? Usually a stock that does well this time of year, not so much, getting absolutely pounded. It's now even getting some negative press from out there. There was an attempt at a major reversal here on 11/20, but there's no follow through. So before I'd even want to consider potentially a short-term bullish trade idea on NVIDIA, I would need to get above the blue line, which is the 5-day EMA. If we can't do that, it's just nothing to give it a bullish edge. If we get above the blue line, we could then go to maybe the red line, and a gap fill would be the upside targets. How about Google? Down on Friday, it's still putting in lower highs. The lows here are trying to hold because there's previous support. We did get down near 1,000 back on the 20th of last week. The intraday low was 1,221. That's pretty much tagging that $1,000 area, which was the target once we broke the 200-day up here. Nothing typically goes down in a straight line. Back here it did, right? Zoom. but there's usually back and forth, but the push lower, losing that 200-day, getting back up and failing to get back above it in early October was a bad sign, and now it just keeps drifting lower. So $1,000 has basically been met, still a support level below 1,000, that could get ugly. And here is Amazon. Let's try that again. On the daily, not quite new near-term closing lows, but you can see just how we're drifting lower. Support, call it 1,400-ish. And how about Facebook? They just getting what they deserve to a degree. Apparently the EU is going to, or it's EU or the UK is going to be calling, I think it's the UK calling them in for, they've taken documents and stuff. Facebook has just got a massive problem. They just want to push their own personal agenda apparently upon everybody, and they say one thing, they lied, and they do another, and they lied, and they're like, oh, well, we didn't mean, it's just like, it almost sounds like government, doesn't it, to a degree. But these guys are just getting taken out behind the woodshed slowly, in a sort of a slow death. We'd have to go back 5 years to get a better picture on Facebook. And we even cracked the 200 period last week. So the next major support zone is going to be down ballpark 121, looks like into 116. There's about a $5 range. So that's really it, folks. I want to keep the video on the short side this week. The outlook for the week ahead, the last week of November, it's the bears have the edge, whether it's the dailies or now the weeklies being broken. Bears get the edge. The bulls got to do a lot more work. We're still in a bullish time period. There's still a chance for the market to turn around between now and year end, but bears get the edge. All right, so I wish you and your families a fantastic upcoming holiday season, and I'll see you in the next video. Take care.